What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the bearded boy wonder, Dave Bartosiak, the people's champ of Wall Street. And today, my friends, we're talking about Workday, ticker WDAY. Now, we're going to get into this in a little bit. Trevor, how you doing? North Korea, huh? We'll have to keep an eye on that situation. Tons of fun stuff. Oh my goodness, I think you're right, Trevor. Let's see what we can get here on the Qs. Huh. Hey Lorraine, how you doing? Wow. See, and here we thought it was going to be just another boring kind of day talking about Workday, and then we get some kind of North Korea headline here. It's going to be interesting to keep an eye on that throughout the course of the day. I'm going to, unless Armageddon sets in here, I'm still going to try to talk about Workday, but we'll keep an eye on this market, I guess. That certainly came out of left field, huh? Trevor, do you know where? I mean, I guess I could pull up some other stuff here, but yeah, UVXY, it's certainly not a bad idea right now, right? Whew. She's on the move. I'd love to see some of the, where's my, wow. All right, well, let's try to focus on Workday here, and we'll get back. Keep an eye on this recent headline with the North Korea thing going on. Aaron, it looks like we got some North Korea situation happening as the market, just as I started to come on here. But let's try and focus on the task at hand, and that was taking a look at Workday landed off the Japanese coast. Okay, so just another, bravado thing, right? Okay. All right, so let's take a look at the price consensus and EPS surprise chart here on Workday. And yes, James, you got it. So what we were talking about before with during the Tiffany's was possibly a straddle there. So that's buying that at the money call and that at the money put in the hopes that Tiffany's is going to move more than that options market is pricing in. So it'd be a good thing to take a look at that this afternoon. All right, yeah, and I thought it was going to be a boring day, Trevor, and all of a sudden this thing just went from 0 to 100 real quick, which means I'm going to have a, it already starts off early, easy for me. Kind of take care of, a few odds and ends that I need to, and then all of a sudden it goes 0 to hero, and that's what's happening now. So from here until probably about 6, 7 o'clock, your boy is going to be under duress. All right, now let's kick it off looking at the price consensus EPS surprise chart here on Workday. As always, the black line corresponds to the right y-axis, which is price. The multicolored lines represent the evolution of our Zach's consensus estimates over time. Green arrows are earnings beats. The red arrows are earnings misses. Mr. Williams, how you doing? And we have a recent miss here for Workday. There's a couple things I want to point out. These estimates creeping up the end of 2014, and the market didn't even care, right? You see that? These estimates are creeping on up, and the stock just still kind of chopping around. And in fact, as these estimates even started to level off, the stock came under pressure. So I'm going to go out on a limb here and say that this was not in the good graces of the stock market. 2015 into 2016, and maybe unjustifiably so. Why do I say unjustifiably so? Because through it all, these guys come out and they beat, continue to beat. You get one quarter to the downside, of course, but everybody's entitled to a little bit of a hiccup, right? But these estimates really turned the corner here in 2016, and that's where you found the growth. And then the story throughout 2017 has not only been turning the corner and baking in some growth, but it's also been the promise of up, and away. The market loves up, and away. So when you see this price consensus EPS surprise chart and this line starts to trickle up, that's a good thing. Okay, I would argue that the slope of the price consensus and EPS surprise, or just the consensus line here on this chart, that the slope of this consensus line is the most important thing. I think this is more important than the gap in the growth, right? Because that's what this gap represents, is the growth year over year. But when you're getting the front, the current year, and those estimates are going up, that's really when you start to see bullishness in the underlying. And that's what you have here as Workday has gone pretty much up and away, and now is up here in the 120s, right? Let's look at the detailed estimates page here. Zach's ranked number 3, hold. Not much for value. We'll see why that is in a little bit. They got growth and momentum. Now these guys are going to report after the bell mañana, so you got the rest of the trading day today and all of tomorrow to decide on what you want to do. Now here is a negative earnings ESP. We didn't used to talk a lot about ESP, but since I've been running Surprise Trader, I've gotten intimately involved with ESP. So essentially what this is it ties into that most accurate estimate. This is telling you recently what's been happening, and it attempts to show you what the recent moves have been up into this report, which gives you a probability of success, right? Not a probability. So let me scale this back. When you see this negative, right, you have less of a likelihood of a positive outcome at the earnings, okay? So when this number's positive, you have a higher chance that you're going to end up beating on this earnings report. This report, okay? And a lot of what we do here is trying to gauge whether or not this report is going to be a winner. Speaking of winners, if you guys aren't already signed up on our distribution list, shoot me those emails, livetrader@zax.com. We'll get you on the list. That way you'll know when these shows are popping off. And, of course, you can join us in the newly botted, that's right, botted chat room that we have over on Discord, where we talk all things stocks. Look at this revenue growth. So the current quarter, 32% revenue growth quarter over quarter. Next quarter looks like 27%. The current year number rounds out at 33.97. The next year looks like 25.41. So very solid sales growth here expected for Workday. Translate that over to the earnings side. Don't pay so much attention to this 300 and Dr. Paul, the doctor's in. You know what's funny? Right before you said that, I had my Pandora open, and I'm like, yo, I gotta change this because I'm gonna fall asleep right here. I'm in the same boat with you, man. I know you love your Tiesto. Since you're the one that spoke up, we're gonna give you some. We're gonna rock out Miami style for you. All right, this will pep us up a little bit. I forgot to have more coffee this morning. Oh, is this coffee? You guys ever stare down at coffee and wonder if this is from today or yesterday? Should I brave it? Oh, man. 97% sure that this is from yesterday. All right. If I die midstream, it's because I drank this coffee that was on my desk, and I wasn't sure if it was from this morning or if it's from yesterday. I think it might be from yesterday. I don't really put a bunch of cream and stuff in there, so I think I'm going to be okay. We'll see. Tracy, how you doing? All right. So, what's been happening recently here? Yeah, you know what? I'm even feeling better now, Dr. Paul, that we got this. Oh, we got this going. Current quarter. You got one analyst upping their estimate over the course of the last 60 days. One has done so for next quarter. If you look at the current year numbers, you got 1 and 1 on either side. 3 analysts have increased their estimate for the next year, though, while only one has done it to the downside. AZ, I can't remember the last time I went to Starbucks. I can't. But money never sleeps, man. I've been doing a lot of work, like a lot of work. Putting in work. I need a Ferrari, like for real. That's happening. So I'm putting in a lot of extra work to get what I want. Like, I know I sound stupid saying that, but not a new Ferrari or anything. You gotta have goals. You gotta have goals, people. And I'll definitely show you. It's cloud stuff here, Jeff. It's cloud. Let's look at the magnitude of our consensus estimate trend. So we've gone from 11 cents to 15 cents for the current quarter. Next quarter, 13 to 15, kind of stagnant. Current year number 70 to 83. Next year from 96 to 111. So nice EPS growth here. I don't like this though. Why are we going sideways? You don't want to see sideways. This market doesn't want to see sideways. It's not going to reward sideways. It's going to reward growth. So you need to have that growth. Now, again, going back to this, if you go quarter over quarter, it's got growth, right? But I also want to see trajectory in a positive direction, and that's, I don't know about this. I don't like to see that. Okay. Let's look here. Revenues. Solid growth, though. Look at this. 70% back in the day, 68, 47. And meanwhile, while this was happening, the stock was all chopping around, right? Now it's got some traction this year. Look at 33.82%. Here's what you like to see. You know, these year-over-year numbers looking good. So, the quarter over quarter, I guess they haven't really punished slower quarter-over-quarter growth, right? Because you see that there. So they haven't punished that. And pretty much every quarter, you do see revenues coming positive, right? So it's the EPS side where it's a little different. And look, they're still not making money, right? And they're not. When are they going to make money? So now we know the great mystery of Workday, my friends. Remember, I was looking at that price consensus EPS surprise chart and going, why is this chopping around like this? This is why. The loss widened from 2014, 2015, 2016 into 2017 even. And look at this. Now, a couple of things I want to tell you guys here. That these are our numbers, the Zach's numbers, and then we show the street numbers on our actual Zachs.com site. So that's why you're going to see some discrepancies. Okay. Here, you know, we take out things like stock options and things like that. So that's why this looks as ugly as it does on this end. But still something to consider, something to look at. Now, here's the frustrating part, is that we're not going to be able to pull up a PE now. You can only look at price to sales. I like having more information, right? When they take it away, it's no good. Look at this. Not particularly enamored by this. Even into this year. Never mind this. Yeah, I'm not going to drink the rest of the coffee. Got a little funky there. All right, so really this is up 17 times sales versus the S&P's 3. I don't like that, guys. Now let's compare them to the rest of their industry. And you'll see that the rest of the industry trades down here about 5 times their book, or 5 times price of sales rather, and this is way up here, Trying to head me off at the pass there, AZ. I got you, homie. Consolidated surprise. So here we space it out a little bit. We go 2 days before to 2 days after. And here we look at July. The July quarter, actually an alright beat and move. Alright, a little bit of a move here. And then it's okay, Easy. No worries, buddy. No worries. Look at October. Negative 15%. So nasty downside. January, nasty downside. Let's try and see what caused this. Okay, so they came in a penny shy. Revenues they beat. You see this? So actually beating on revenues, and the market still doesn't care. So the market is very much fixated on earnings here for Workday then. That's what that's telling me. Although here you get a miss, and the stock goes up. Oh, I'm sorry. This is a beat. Remember? Hang on. We're on the other side of the matrix here. Hang on, guys. Hang on. Let me fix this. I'm being confusing. I'm confusing myself. Negative 51 cents. So if you report negative 50, then yes, you're beating. You're to the upside. Okay. So small beat. Market didn't like it. That must have been guidance for the next quarter that upset everybody. Without even looking at it, I'm sure that's what it was. And then in that next quarter, they did beat a little bit, and that still wasn't enough. So they had some lofty expectations here that they just didn't meet. And then here, July, October. Okay. All right. Let's look at the chart. What do you guys see here? Hey, remember in some of these other no, everything's ruined here, Trevor. Nothing's working according to plan anymore. I haven't had a solid OBS stream in like 2 or 3 weeks. And Jeff can scream bitrate all he wants, but there's something more sinister at work here. I'll have to figure it out. For the last few weeks, I've been talking about this phenomena where the 50-day and the 200-day kind of come together, and then that happens also with the Bollinger Bands, where they get close, then eventually the thing breaks out, right? Here we don't have that situation. That's occurred in the past, but I just like pointing out chart elements when I see them, and that's so when I talk about this is why, right? Now look at what's happened recently. No, Dr. Paul, I got Comcast. Download speeds are not the problem. It's the upload speeds I'm having issues with. I have to have a little chat with them. This is the 50-day providing some support here for the stock. And it's happened several times. Several times along the way. Gotten down there, found some support, and then rallied up. Most recent here. Now, whenever I see something that's got this choppiness, because this seems very choppy. I mean, even going back to the price consensus EPS surprise chart, you can see that. It's when our good old buddy, the commodity channel index, comes into play. Because you can use this as a good timing mechanism. So when it rallies up above and starts to cut down, that's a sell. You don't even need the cross of the zero line. A lot of people wait for the cross of the zero line. When it's super choppy like this, you don't need that. Let it go to an extreme. So like negative 100, just let it cross over negative 100, and there you go. So when you see the CCI way up, you can go ahead and step on it. Just step on it. They've got fiber here, Jeff. They got gigabit internet through Comcast, whatever it's called. But it's like 150, and I'm paying only 75 right now for my 150 megabit or whatever it is. So I don't know. I got to see what's going on. I'll figure it out. So the 50-day, 200 days all the way down at 100. Look at this sort of volume profile that we got going on here. You got a lot getting out there right by the 50 days. Look at that. This coincides with the 50-day now. That's pretty good. Well, you know, I don't know what to do here, guys. I've been having these buffering issues. Been having issues, man. Time to Twitch. He says it again and again. I know. I know, man. It's maybe it is time to Twitch. We can talk about this in the chat room later. But I've been having all sorts of problems just over the last couple of weeks too. 2 weeks ago, I'd say, is when it started. So I got to look into it. I'm thinking the 50-day provides support, if not the 200-day. It makes it pretty easy. To the upside, who knows, right? Fib extension perhaps, but this has been so choppy. Let's see if this already hit an extension. Let's do this while we're here, just for giggles. The move from here to here, let's draw an extension on it. Actually, let's do it the other way. Let's do it the other way. Here to here. There we go. See what I did there? So if you draw just this fib from the lows to the highs, gives you some retracements. The 50% retracement actually happened to coincide with that high and that high. And then it went higher. 161.8 extension is there. I'm going to draw the 50% extension. And I bet you it's right at the high. Look at that. Oh, man. Wow. Look at this. Gets here, retraces to the 50, extends to the 50, and now it's coming down. Wow. That's remarkable. So here's another support level, guys. 104. So in between. That could set up a perfect rope-a-dope. I could see this market coming down, just dabbling, and then bow. Interesting. Look at how that area provided. Look at that. I mean, so you got the initial top, failure, comes back down to the 61.8. Intraday, fought through it, boom, finally through. Then they rope-a-dope it back down. Then you're just kind of in no man's land, right? No man's land till you got new highs, which fail, and then there you go. So overall, still a nice bullish pattern to it. Still a nice bullish pattern. Okay. Let's look at what bar chart has to say. I love it. Bitcoin #1 front and center on bar chart now. S&P, Bitcoin, crude, because that's all we're going to talk about anymore. Wild Bill, everything's broken. Everything's going downhill. You know, this Zach's Live Trader thing used to be good. Now it's just gone to heck in a handbasket. Terrible. The stream's all messed up, man. All right, these guys are going to report this week. So we can look at this front week real quick. The blue and the purple, AJ, probably the 50-day and the 200-day. Is that what we're talking about, blue and purple? Yeah. I prefer the term thug pink, actually. The blue and thug pink. So 50-day, 200-day. Thug pink. All right. Now, 114, 115. And at the money call going 380 by 420. We're going to call that $4 holler all day. At the money, wait, I'm in the 114s. I don't want to be in the 114s. I want to be in the 115s. 115. Sorry. Hold, please. There we go. All right. 330 by 370, looking for 350, and then 340 by 380 is a 360. So they're looking for 710 at 115 or 6% move out of Workday. Okay, just about $7. So that puts us in the 122s and the 108s. So this is the realm that we are in. Okay. Now, how does this thing drift? Does it drift? Has it drifted? And again, remember guys, these lines aren't really perfect here. But following these earnings reports, I bet that dropped after. So it almost seems like, and I wonder when that move was. So the stock definitely reacts to earnings and does have a tendency to move, okay? Only a few times I see where there's just a lot of choppiness. It's more of a trending sort of move. So that's good for those of us that want to just sit on the sideline and do the post-earnings drift play, right? Because this tells us that, you know, maybe you're not going to miss the whole move. Remember here, it only moved 5% there immediately following earnings, but it looks like the move was a little bit more than 5%. So these moves don't exactly happen that first day and you're out. So you do have a chance to catch some post-earnings drift. We can look at the December expiration. That's fine. Going this soon, you know, only going out to December is going to increase the risk of this substantially, just so you know. Further out you go, the lower your risk is. Now, first let's look at this bearish side. Where did I say 108? Hang on, let me pull up this 50-day again. 50-day 108 pretty much. 107.94, which is 108. And that's what the market's looking for too. So if the options market's pricing in a $7 move, and you know that 50-day is right there at 108, that might not be a bad idea. And then again, our little half move might not be a bad idea either. So we're going to price both of these for you while I got your attention. So first, the 115. If you go long the 115 put, this is the December 15th expiration. It's going to cost you $4.35. Simultaneously selling the 111. So here I'm doing the closer one. You're going to get back $2.73. So your net outlay on this one's going to be $1.62. The difference in the strike prices is $4 minus that $1.62. You can make $2.38 on $1.62 or 147%. That's pretty darn good on a bull debit here. So you can get 147% potentially with only one, what did I say, 162? Or what kind of sorcery is this? Is this a Y? What is the YX? 162. All right. Now let's look at the further out, the 115 to 108. So you're still going to get $4.35 for that. You're still going to have to pay $4.35 for that 115 put. The 108, you're going to get $1.85 back, so $2.50 is your net outlay. Now the difference in strike prices here is $7 minus that $2.50 is $4.50 divided by your $2.50. That's 180% that you can get on that. Now here you get 147% to go from here to here, right? And then 180 for the whole thing. So the way I like to look at it is if you're got another 33%, right? This is just the bearish play. We're going to do both of them. I'm going to do both. So that puts it in perspective. So why take on the additional risk of this $3 just for that 33%, right? Don't really like that. You can get a nice little risk versus reward just by going there. So here's a bear debit for you. Bear debit long to December 15th. 115, 111 put spread for a 162 net debit. Okay, So the stock doesn't even need to go and finish underneath that 50-day moving average, or even get to it for you to make money. Just has to close under 111. Now let's look at the flip side. For the bulls, using 115, you can actually, well, I guess you can use 115, that's fine. I was gonna say you could probably use 114 also, as the stock is, 114.68, but let's just look at the 115. And then if this is pricing in $7 to the upside, you're talking 122s on this one. And again, we can do a similar scenario here. Now, hang on. Back to this chart real quick. So it hit this target, and then that next target is 118? 119? Oh, what'd I do? I broke it. Now I broke it. There we go. Goodness, let's get this in a proper direction. All right, there we go. So 115s, I said 122, but 118 is really where that one of those fib targets is, right? You can do 118, you can do 119. Just depends on how much you want to put at risk here. Let's do 119. So here, going along the 115 call is going to cost you $430. Simultaneously selling that 119, you're going to get back $255. So $175 is your net outlay here. Difference in the strike prices is $4 minus that $1.75 means you can make $225 on a $1.75 for 128%, potentially, right? Potentially. So basically, you're, just looking for that stock to kind of push to that extension. But that whole fib structure might be over here. It might be done. It might have just, that hitting that 50% extension might have been the extent of this move here. I wouldn't be surprised if it came back down to, retest those previous highs. Oh, let me type this up real quick, Wild Bill, and I'll push up a condor for you guys. So in this case, the bull debit is long, the December 15th, 115, 119 call spread for $1.75. All about these front weeks. Now, let's do this. Go side by side. You can visualize these condors a lot better when you do it side by side like this, right? So let's stick around and have $1.15. And typically what I do when I'm talking about condors is I go as far as the market is pricing. So in this case, about $7 to the upside. That puts us 122s. Okay. And you do the same thing on the downside, which is 108. All right. So the way a condor would work is you would sell the out of the money put spread, sell the out of the money call spread, pocket the credit, and hope that the stock stays, in this case, under 122 and above 108. So there's 4 legs to the trade. So first on this end, you'd sell the 122 call. You get about what is this showing? This is just showing. Am I getting bid and ask, or I'm getting bid and last? I think I'm getting bid and ask here. I made it so pretty I don't want to go back, but I have to. Let's see. Bid and ask. Yeah, I'm getting the bid and the ask. Okay. I'm gonna go back to I gotta redraw my pretty picture here for you. 115 and the 122s. There we go. Okay. So, selling this out of the money call spread, you're going to get $1 for that 122 call. Simultaneously, you're going to go long the 123 because you don't want unlimited upside risk, right? So, subtract the $80 it's going to cost you to buy that 123. So, you're going to have a 20-cent net credit on this end, right? So you can go ahead and say, okay, I got 20 cents here. Now on the flip side, you sell the 108 put for 115 and buy the 107 put for 95 cents. So again, 20 cents. So you get 20 here, okay? So you got 4 legs, 1, 2, 3, 4, okay? Now your total credit is going to be that 40 cents, right? Now, that's going to be your max gain. And you're going to make that max gain as long as shares of Workday close between 108 and 122, okay? As long as it's in that range, you're going to pocket all 40 of those cents. Now, there's 2 ways that you lose money. One is if it's above 122. The other is if it's below 108, okay? If it's below 108, the most that you can lose is this difference in the strike. So this is $1, right? $1 in the strike, right? You can lose $1, but you pocketed that 40 cents. So that means 60 cents is what you're going to have at risk, okay? Same thing's going to happen to the upside because the difference in strike prices is $1. So 60 cents is the amount that you have at risk. So when you're putting on something like this in your account, you're going to have 60 cents for every time you put this trade on, or 60 bucks, right? Obviously, there's transaction costs involved too. So you can make 40 on 60, or you can make 66% on this condor. Now, what do you need to make 66% on this condor? Shares of Workday would have to close on Friday the 1st. Yeah, this is front week, Trevor. On Friday, December 1st, between 108 and 122. So here's an iron condor front week example. December 1st, 107, 108, 122, 123, 40 cent net credit. Okay? You can change that condor. You can go further out. Now, the further out you go, the less credit you're going to get, right? Because look, if you went all the way over here, and plus, I mean, good luck. Well, maybe you'll get filled. Further out you go on the put side, the less credit you're going to get, and the further on the call side, the less credit you're going to get. But when you think in terms of annualized return, it's pretty darn good. And the other thing that you can do here, when we set up condors, when we set up these other kind of spreads, you can wait. You could wait until the day right before the earnings report in order to put it on, right? You could do it if you wanted to. You could wait. It's only one more day, right? But you could wait and then adjust it depending on exactly where the stock is. Because right here we're kind of in between strike prices too. It's this 114.58. So you can adjust your timing a little bit. You know, you can add layers, add layers of complexity, or you can say precision, right? Hopefully give yourself a little bit more of an edge, right? Okay. Now, what do I think the trade that pays is going to be? I'm having a tough time with this. Excuse me, guys. I read a few research reports. There's a lot of companies out there expecting a beat and raise quarter out of Workday. I do like these revenue numbers. I like that they're increasing. I like that this stock gets a lot of coverage. Look at, I mean, when's the last time you saw 38 estimates from a stock on Zacks? So it's well covered. There's a lot of eyeballs on it. I don't like that it has that negative ESP, but that's not bugging me all that much, to be honest with you. So there are a couple things I don't like about the stock, but I think overall you got to have a bullish tilt to this one. From a technical perspective, this is not good, okay? Maybe it comes back down to test this area, but I could make the argument here that this was the previous high and that heading up into the earnings report, I wouldn't be surprised if this thing kind of swung back down tomorrow if we got within this range, and that we could buy this, so we could put this trade on tomorrow with a little better, more favorable strikes, right? So I think that's something to consider. So I'm going to call the trade that pays this bull debit. But I think that tomorrow you can get a little better entry. I think this will trickle down a little bit, and then you can go ahead, because the technicals right now are negative. So if that technical pressure carries on to tomorrow, you're going to get a much better price tomorrow. I would not be surprised if the stock is down tomorrow, heading into the earnings report. But I think that I think things are going to be good. So I'm officially going to say the trade that pays is bull debit. I'd wait to put on the trade at different strikes late in tomorrow's session. But officially, I'll use this 115, 119 in our GBU and all that. Okay. Now lottos are going to be very expensive here, obviously. I think they're after the bell tomorrow or before the, yeah. So after the bell tomorrow. So in terms of lottos, it's still kind of expensive out here. And for a stock that is, you know, I guess had some 15% to the downside moves, I guess it's not outside of the realm of possibilities that there could be a, you know, 10% to the upside move here. If you want to do the lotto, maybe looking at the 123s, something out here. A little more expensive, the 120s. I think 123s, something like that. Been into 124s. Because you got to think, if you're looking for that outside event here. Yeah, I think 122 is just too expensive, though. I think I want to come further, maybe a little further out, even. Just because instead of spending 100, and spend 63. So I don't know. All right. So that's all I got for you here today, my friends. Thanks for chiming in. Thanks for the patience. See, I don't ever see the live show, obviously, because I'm doing it. So I don't ever know about this whole buffering issue. I don't even know what's happening or how often it is. I am seeing my OBS stream getting interrupted here, and it's frustrating. But I'll figure it out. Probably not today, though, because I got a lot going on. So that's it. So tomorrow we're going to do Ulta, because I love Ulta. We got to do Ulta every single time. Then we're going to do a day of on Thursday, right? And that's when you'll also get a GBU. And then that's going to set up for a fantastic morning after on Friday. So shoot me those emails. Oh, Jason, thanks, buddy. And again, for the noobs out there, don't go pulling the trigger. Don't go pulling the trigger immediately. Learn everything you can. Well, Tiff, yeah, you know what, James, you're right. Tiffany's is basically in the same place as it was. Okay, so we were looking at the money on Tiffany's. At the money, Strato. Yeah, she does. She sure loves the Ulta, man. Let me tell you, and she definitely buys makeup. She certainly does. You know, my uncle owns a body shop. I'm gonna leave it at that. Scott, one day I'm just gonna bring her a can of Bondo, and I'm sure she's gonna be very upset, probably punch me, but it's fun. It's fun. 263 by 284. So this is what you look at. So basically, we're talking about going long this side and long this side, and just hoping for a pop, more significantly one way or the other on Tiffany's. So that's what we were looking at there. Okay. All right, that's it. That's all I got. I will see you all mañana. If you're not already hooked up on the distribution list, shoot me those emails, livetrader@zacks.com. We'll get you on there. And then, of course, in the Discuss chat room, which is getting epic with all these bots, man. It's fantastic. So I will see you all mañana. Have a great day. Thank you so much.